So you're in the market to buy a house and you're thinking to yourself, how am I going to get the lowest payment? And everybody tells you that interest rate matters. And if you've been talking to your friends and family about the possibility of you buying a house, you've probably had everybody in your ear telling you, oh my gosh, you have to get the lowest interest rate. That matters. And what is your interest rate going to be? And make sure you do your due diligence. And you're just like, okay, well, I don't even understand how interest rates are calculated and how that affects my payment. My name is Amy DeBusk, and I am a certified mortgage planner. And what I'm known best for is making mortgage simple and easy to understand for career-savvy first-time homebuyers just like you. So I want to go into the three main criterias that calculate what an interest rate is for you as the first-time homebuyer. So, number one criteria is the loan product that you choose. So, an FHA loan versus a conventional loan. An FHA loan typically is going to have a lower interest rate than a conventional loan. However, FHA does not always have the lowest payment because there is private mortgage insurance on an FHA loan that is going to increase your payment. Whereas a conventional loan, there's lots of different things that you can do with the private mortgage insurance on a conventional loan. And the interest rate, even though it is higher than an FHA loan, the private mortgage insurance is lower. And you're also financing less on a conventional loan because the conventional loan does not have upfront private mortgage insurance, which is what FHA has. But if you have a lower credit score, you are going to be forced to do the FHA loan because that's the only loan you're going to qualify for. So, not a bad thing. And just because the interest rate is lower doesn't always mean that the payment is going to be lower. Number two is credit score. Of course, the higher your credit score, the lower your interest rate is going to be, right? That would make sense. However, there are some loan products that are a little less sensitive to credit score, like the FHA loan. So if you have a 700 credit score, you're going to get the same interest rate as somebody with maybe a 680 credit score on a FHA loan. However, on a conventional loan, credit scores really matter. And the interest rate on a conventional loan is highly sensitive to the higher credit score. So we go up all the way up to an 800 credit score for calculating what your interest rate is going to be on a conventional loan. And it does say that conventional financing goes down to a 620 FICO score. If you have a really large down payment, you can actually even go lower than that if you have an automated approval. But that's kind of getting in the weeds. But typically, my first time home buyers don't have a large down payment. So if you're working with like a 3% down payment, on a conventional loan, you're going to want to have a really high credit score. I would say you need to have at least a 700 credit score to go conventional with a low down payment. So those are the differences between FHA and conventional on the two criterias, loan product and credit score. The third criteria is down payment. So down payment matters. So if you're putting a 10% down payment on a conventional loan versus a 3% down payment, your interest rate is going to be lower. For FHA, it doesn't matter. So a 3.5% down payment with a 700 FICO score is going to get you the same rate as a 3.5% down payment with a 680 FICO score. There's a minimum down payment requirement on FHA, and it's not rewarded to put more money down on an FHA loan to get a lower interest rate. So there you have it. Those are the three main criteria: product, credit score, and down payment. If you have more questions about how to get the lowest interest rate on your first-time homebuyer loan, please log on to talkingwithamy.com. That's talkingwithamy.com, and book your free 30-minute discovery call